We closed.
A, B, C.
That's right, I finally closed on a small business here in Houston, Texas. It is a carpet and steam cleaning business. I've been doing some content on it already, and I'm actually doing a weekly or bi-weekly live stream talking about my experiences there, and I plan on doing quite a bit of content on that business in the future. But it's definitely altered my financial picture in a pretty significant way. For one, I have employees to worry about, so that is a new layer of responsibility, and that sort of changes my financial incentives in a pretty significant way. But with the added responsibilities of having employees and having this business, I also have a lot more financial upside in that this is a quality asset, or at least I think it is, and I'm trying to make it even better and grow it from there. And there's a lot of opportunity to grow it. And because I bought an existing business with existing cash flow, I've also improved my current cash flow position. Even though I took out debt to buy this business, I have cash flows from the business that can be used to pay down the debts or reinvest back into the business, whatever I want to do. I still have my salary coming in, and that is currently being used to pay down debt. We'll get back to that in just a second. But the point is, I've made a very big step in my financial life, and I think it's going to be a very momentous one at that. We'll see what actually happens over the long term, but I'm really liking how things are going so far. And like I said, I'll have some more content about running that business in the future. But for now, you're probably curious on what this month's net worth numbers look like, so let's get into that. As a reminder, last month our net worth was just under $88,500. As always, let's start with the good stuff, the assets. Our cash pile has disappeared. Well, at least the cash on my personal balance sheet. It is now gone because it was invested into the business that I just purchased. And speaking of that business, I have it listed right here, and the current equity I'm assigning to it is $185,000, and that includes some cash reserves in there, so there is cash baked into that value. And I think what I'm going to be doing for valuation on this going forward is I'll have kind of the book value that I used to purchase the business. It was about $172,000, and then I'll add the cash or whatever very concrete asset values I have there to add on top of it. And in the coming months, I'm probably not going to be too particular about the valuation here on this business, and instead I'll wait until things are a bit more stabilized. I just hired a new manager, so for now I'll keep it pretty simple. Maybe in many months' time I'll take a look at what the actual cash flows of the business were and then use that to try and extrapolate a sort of value, maybe see what multiples might be for selling that business, that is multiples on the free cash flow number, because that would be used to determine the price in many cases. And to put this deal into perspective, at least when it comes to my stock portfolio, it now makes up about 2/3 of my taxable stock holdings, assuming you count this private business as a stock, because it's not a publicly traded stock, so it'd be a lot less liquid than some of these other holdings here. And this deal has definitely changed my perspective a bit when it comes to the rest of my stock portfolio. They could instead be consolidated down into a few holdings, so I'd be more incentivized to actually pay attention to them, because right now I'm definitely going to be putting the vast majority of my energy towards this private business that I just bought. And my thinking is by having fewer holdings, I'd have less to sort of look at, and the incentives would be a bit more aligned in that the stress of owning that thing would actually be worth it because the reward would potentially be much greater because it's a more concentrated holding. The holding itself would be bigger. I'm still kind of wrestling with that idea. And speaking of my stock portfolio, the stock market has been on a bit of a tear over the last month. So I've seen some pretty significant gains over the last month, and that's helpful for net worth purposes, although it doesn't really change my situation all that much. And my 401k officially eclipsed $30,000. But in total, this leaves me with about $1.28 million in assets. And now on to liabilities. As we discussed last month, I took out a bunch of personal loans, and all the cash from those loans allowed me to make the business purchase, but now it's time to try and deleverage again, try and get rid of some of this debt. And I made it a stated goal in one of my previous videos that I was trying to pay down $200,000 in debt this year. So I went ahead and created a debt paydown tab on my net worth tracker spreadsheet, which you can see in the description below, and I'll be using it to track paydown through 2023. And this month we got off to a great start. A lot of that was helped by my annual bonus from work, but also the fact that we didn't have a ton of additional expenses in January because a lot of those were incurred in December, especially in connection with the business purchase. When it came to debt paydown last month, I focused almost all of my energy towards paying off my M1 finance margin. I still have something like $9,000 remaining, but I was able to take out the vast majority of it, so that's great. And it ended up being $18,500 just in margin paydown. And pretty much all of these other paydown amounts, besides the student loans, were just from making minimum payments, and that is just automatic principal paydown. that came with making the minimum payments. For student loans, we still don't have to make any payments yet, but I guess you could say I've been making courtesy payments on the student loans of $500 per month. I might actually change that because I set up this auto pay a long time ago before I had all these other interest-bearing loans, so it probably makes sense to actually switch that money towards something else. In total, I had over $21,000 in principal paydown this last month. Definitely happy with that result, and I imagine next month's number will be a bit lower, but we'll see. With all that said, this means we have $1.17 million in liabilities, which means our net worth is just short of $108,000, which is an increase of just short of $19,500. That means our debt ratio has fallen to 91.58%, and our passive income remains at $1,100 per month. So overall, we had a productive month. Now, a quick note on the passive income number. You might be thinking, wait a second, didn't you just buy a business? Aren't you getting passive income from that? Well, I am getting income from it, but I wouldn't call it passive, at least yet. I'm still working on this business quite actively. I guess you could kind of call it semi-passive in that I don't have to put in a ton of time relative to the amount of money I might be making. But in any case, I would hesitate to call it passive income at this point. If I get this business to be extremely passive and completely outsourced, then I guess I might throw it on here, but I kind of doubt that will happen anytime soon. And instead, when I talk about passive income, I'm really referring more to investment income from things like real estate or dividends or something really truly passive or close to passive, at least where I'm not putting a ton of time in on a day-to-day basis. Anyways, what's next? Well, we have some exciting times ahead of us because I now own this business and there's always something to work on. So it's been a lot of fun trying to put the pieces together. Granted, things were already set up pretty well, so there's not a ton to do just to get things going because things already are going. And now it's more about optimizing and looking for new avenues to grow or even existing avenues of growth because there's still plenty of room in the overarching pie that is carpet cleaning. And if you want to see what I'm doing with that business, then be sure to subscribe so you don't miss future updates. But when it comes to growing this business, I'll be looking for a few things. For one, if I'm able to acquire another related business and could sort of merge those two things together, that could be a great way to do things, but the deal really has to make a lot of sense. On the other hand, I'll be trying to grow the business without making an additional acquisition as well, because you never know when a great deal might come up. But you could always do something to try and grow your business with your own efforts. And that's what I'm focusing on currently. I'm working on building the team out, improving systems, and simply trying to put the business in a better position to succeed. And with that said, I should probably get back to doing that. So if you like this video, definitely subscribe so you don't miss future updates. And until next time, take care.